Now, a very good afternoon to all of you. I'm probably the last thing standing between the panel speaker and then your lunchtime. So I would try to keep everything brief. Fortunately for me, I only got one single market that I have to cover, not like, Chun Hong and Christopher who had to cover so much more content. So I just going to talk, briefly about the Japan market. Now, just a quick, background. I hail from Nikko Asset Management. It is one of the largest, if not the largest, asset management company out of Japan. Obviously, I caveat that because Nomura is in the house as well, so I dare not call myself the largest in Japan, right? But we're very, very fortunate to work very closely with Affin Hwang Asset Management, and so we white label this product in order for it to be available in the Malaysian market for all of you. So let me just have a very quick show of hands, because I like to do this, especially in November and December. So now that I'm here, can I just ask, during the last 2 months of holiday, how many of you have gone to Japan? No? Really? Nobody? Oh, okay, a couple of hands there. Wow, okay, I'm surprised, okay? Reason being, maybe it's Singaporeans, we're just so starved and we want to get out of our tiny little island. So when I asked this question in November, December, I have to tell you, statistically, 4 out of 10 people went to Japan. Singaporeans. The other 4 out of 10 went to either Taiwan or Korea and things like that. So everyone is trying to get out. And the reason I ask this even in this audience is because many of us actually know Japan as a tourist destination. You know where to go and shop, where to go and buy your trinkets and all these others. You all have your favorite ramen, sushi and all that. But suddenly when it comes to investing in Japan, all of us draw a blank. We're like, Japan can invest one. Okay, so I'm here today to educate and share a little bit more about why Japan. Now, first and foremost, if you've been following the markets very, very closely, you will realize that Japan has actually had a stellar year in 2023. Now, as you can see from the chart, it's one of the best performing asset classes, which also is going to beg the question, Darius, since it has done so well, are you sure we should be buying into this asset class right now? And so I'm going to provide 3 reasons in a short while to hopefully convince you that it is still worth looking at Japan. Now, the first things first is, why did Japan do so well in 2023? And this will kind of set the scene whether it's going to be a continued, kind of a rally coming into 2024. And the reason being, it is one of the last few to actually emerge from COVID. So as you all will recall, they were very, very slow to open up for tourists and all these others, largely because they have a very elderly generation. So they were worried that the elders get, COVID, and then they will be struck into a mini kind of a catastrophe. So frankly speaking, because they didn't open up, for businesses within Japan, in order for them to survive, what did they have to do? They have to turn away from the tourist-reliant kind of a monies and focus a little bit more on the local consumption, which means that, your purchases from your locals as well as your goods and services have to thrive in that arena. Now, many of us also know that if you go to Japan, they are successful in doing so. Why? Because their ramen stalls and all that, there are a couple that have, widespread chains and all these others, but many of their businesses actually rely on regulars. And if you are not a local, I had this opportunity to go to Japan, and my colleagues in Japan brought me to this, drinking place, this hole in a wall. Now, I guarantee you, if you and we just walk by, we never knew that underground, inside that door, down the basement 2 levels, there is actually a pub, and it's a live band kind of a situation. So that is the situation with Japan. There are a lot of domestic quirks, a lot of domestic things that unless you're there, you will never get to experience it and know it for yourself. So the other thing that drove this, right, is actually also their rise in wages. Now, I'm sure many of you work and you have, increments and all these others. And I think similarly across the aisle, if we don't get increment, we all feel very upset. You agree with me? Yeah? Now, in Japan, when I spoke to my colleagues, I have to tell you, I was shocked that in 10 years, they have not had pay increment. 10 years, no pay increment. Why? Because as some of our earlier speakers have alluded to, Japan has always been deflationary. So last year is $10, next year is $9.90, 98, right? So great problem, right? Now, I then asked my colleagues, hey guys, is it true that there's really no inflation in Japan? And they all laugh and say, no, there is inflation. You all think that there's no inflation. But let me give you a good example. Do you know that in Japan, Coca-Cola is the same 100 yen for the last 20 years? The only difference is this: the can went from this size to this size. And all of you tourists think that Japan people like small and cute stuff. No, it's because they downsize everything. 100 grams of grapes you could buy for 100 yen. Today you go there, it's 80 grams. So while there's no real headline inflation, there is real inflation, and all the more exacerbated because they haven't had real growth in their wages. But as you look at the chart, you can see they have finally gotten a decent amount of wage growth, which was the thing that also helped propel all the domestic consumption within Japan. The next bit, which is kind of similar to what some of the earlier speakers talked about in tourism, Japan actually realized years and years ago, under the late Prime Minister Shinzo Abe, that, they cannot just be an exporting nation. Sure, the rest of the world, we love the Toyotas, the Hondas, and whatnot have you, but at some stage, they cannot just be reliant on exports. So they have to grow that domestic consumption. And the one way to grow that domestic consumption was to get more tourists. So if you do remember, back in the days of Japan, Shinzo Abe, he basically said, we want to get to 30 million tourists. Now, at that time, he was in power around 2011, 2012. They were only doing around 6 to 8 million. So he wanted the country to essentially five-fold the number of tourists. So a lot of people were very skeptical. They're like, how can we do that? We're aging infrastructure, so on and so forth. But the proof is in the pudding, in the numbers. They managed to do so, and they accelerated their tourism by leaps and bounds. 2 years before COVID struck, they actually already crossed the 30 million over tourist number. But as we all see, in COVID years, it has dropped dramatically. But right now, even when this number was generated, it was end of October 2023. So end of October 2023, 19.9 million people has actually visited Japan already. Now, where were all these numbers coming from? Importantly, that's on the next slide. So I wanted to show you, on the left-hand side, you see Korea. Korea has more than tripled their number of tourists going into Japan. Even on the extreme right-hand side, you can see the USA. The USA actually sent more tourists to Japan last year than they did previously before COVID. Now, what is the one statistic that's obviously missing? That center bar over here with the arrow, and that's China. So likewise, I think it was Chun Hong who mentioned, Malaysia has had only 40% of tourists coming back into Malaysia. And similarly, in Japan, you haven't seen all the Chinese tourists going back in. So, caveat sidebar, if you haven't gone to Japan, please go before the China guys go. But the point being is, you can imagine, once they hit there, how much more tourism dollars and all that can be generated. Now, before I head on to this slide, just one other side note that I wanted to talk about the tourism, which slips my mind. A lot of people, earlier on when I mentioned, they are worried about the infrastructure, right? Can Japan actually support that many number of tourists? Now, do you recall that in 2020, they were supposed to host a major event? And all still remember? What was that? Olympics, there you go. But it got delayed to 2021. Now, one thing that I wanted to highlight and bring to your attention is that when they actually were preparing for Olympics, they spent a lot of money as well. Just like Rio did, Brazil did, before, just like China did and all that before. The only key difference is this. When China and Brazil, they were preparing for the Olympics, they were actually building new infrastructure. So if you recall, in China, they built this big thing called the bird's nest. You remember? And for a while after the Olympics, they didn't know what to do with it. It was lying dormant for a while. Similarly, in Rio, many of the infrastructure that they built to accommodate the Olympics went, unutilized for a long period. But over in Japan, they didn't do that. They actually helped to refurbish existing infrastructures. They strengthened their railway train systems, so on and so forth. So that is why, from an infrastructure perspective, we feel that they are more ready right now to accommodate that many amount of tourists than they actually were even before that. Coming to the second last point that I want to talk about in terms of the macro for Japan. Now, while all these talk about tourists, spending on money, wages, is all the good feel that you can generate, the reality is this. We are living in a world where geopolitics, macroeconomics, monetary policies, and all that are very, very key. And over here in Japan, you can see that they have been one of the so-called weakest currency players for a very, very long time. And it was exacerbated because, again, let me just walk back a little bit so that I can point this out for you. Over here, they just essentially went from 0 interest rate to minus 0.5. Okay, so you can't tell really from the line there. But what you see on the corresponding is that the US actually went from 1-2% all the way up to the 5-6% that we know it. And with this interest rate differential, you actually then get a very, very strong weakening yen. That's also the second reason why all of you should go to Japan right now, because the yen is weak. Now, the yen is weak also causes a lot of problems for them, okay? But what we wanted to share is that this, okay, let me just jump this slide first. So I wanted to share this, that Japan, they actually weakened their yen by more than 34%. Now, the key thing though is this. Actually, Japan enjoys a weak yen. All right? For many of you who have lived through many market cycles, when they have been competing with the US, a weaker yen always gave them the opportunity to export more. Right? That's one of the reasons. But today, it's not just a Japan versus US kind of a story. It is also a Japan versus Korea, a Japan versus China kind of a story. And again, I'll just do a very quick straw poll for you to understand what I'm talking about. In the 1980s, 1990s, I'm sure many of us, if we could afford a television in our house by then, it was always Sony and things like that, correct? Today, can I just ask, who has a Samsung or LG TV at home? There you go. You can just look around. Who has a Japanese TV at home? Okay, fewer hands, distinctively fewer hands. The rest, I suppose, are either Malaysian or China-made TVs and all these others. But you get my point, right? The competition is no longer just Japan versus the US. So this is very, very key. They need to make sure that they are competitive. However, that being said, do they want their yen to be all-time weak? The answer is no. We do think that they will strengthen it a little bit, but at the moment right now, the government seems to send very conflicting signals. So last year in about October, if I didn't remember wrongly, they mentioned that we want to strengthen the yen. But in the exact same day when they mentioned it, the yen strengthened a little bit, and then they went to do a buyback in the market, and the yen collapsed back down again. So some people are very skeptical, and they're wondering, is this for real? But at the moment, I would still say that it is advantageous for Japan, more than disadvantageous, for them to be actually holding a weaker yen. Now, for many of your experienced investors, then you also will ask me this question. Japan is a huge exporter though. Wouldn't it affect all their exports? Because they will import raw materials expensive, build, and then they have to sell it at a lower price. Won't this affect their balance sheets and P&L? Now, we actually spend a lot of time, because we are one of the largest asset management companies in Japan, we went down to speak to every single company. And one of the examples that I'm going to give to you is Toyota. Toyota is the number one holding in our portfolio. And we basically asked them this: what effect does a weak yen have on your business? And Toyota laughed. They said, none. We go, what do you mean none? They said, well, you must remember, out in America, I've got factories there. I buy raw materials in US dollar, I sell in US dollar, and I pay in US dollar. In Asia, my factory is in Thailand. I buy similarly in US dollar or Thai baht sometimes. I sell in Thai baht or around the region. So frankly speaking, I don't have that much of a beholden to what is the US dollar versus the yen. The one and only time it actually makes a difference is when they have to do end of the year reporting in March, which is coming up soon, all right? And why is that so? It's because when they finally report and repatriate earnings, if they are reporting it in a strong dollar, what happens? Their earnings in yen will just shoot up. So that's why we were saying to you all that, look, it seems it's going to be more advantageous for them to still maintain a slightly weaker yen, even for all these exporting companies to do some of all these things that they actually do. All right? So we're not overly concerned, but we do think that there's going to be a little bit of appreciation of the Japanese yen in 2024, given that it is near all-time lows already. Now, the last thing, so I talked about domestic consumption. I talked a little bit about how the macroeconomics is still favoring Japan as an asset class. The last thing that I want to talk about is corporate governance. Now, corporate governance is a very big word. It's been thrown around a lot. But let me just succinct it, distill it down to two very simple thoughts for you. The first thought is this. More than 10, 15 years ago, if you look at the Japanese market, only 25% of companies were profitable enough to pay taxes. Now let's just sit with you for a moment. Only 25% of companies were profitable enough to pay taxes. After the whole corporate governance reforms, 3 arrows by Abe and all that, now they are in a much healthier state. 70 to 75% of companies are finally profitable enough to pay taxes. So this shows you that really at the heart of it, the balance sheets and the P&L of many Japanese companies have gotten stronger. Now, the other thing that I'm putting up on this screen is this, the Tokyo Stock Exchange has recently made this very, very peculiar announcement, but we think it's for the benefit of all of us as investors. And what is that? Essentially, again, it's a huge regulatory piece of paper, but let me distill it down for you. It just means that Japanese companies, if your price-to-book ratio is less than 1, you got to explain why in your annual report. Okay, it's as simple as that. Now, if you look at the table behind me, you will notice that there are two green color bars. And the two green color bars essentially form 49% of the Japanese market. 49% of the Japanese market right now, price-to-book ratio is less than 1. So for many of us, if we're buying those companies, it's actually a discount. The price that I pay is less than $1, but they got $1 worth of book value. However, what this also means is, frankly speaking, two things. One, maybe they got too much cash and they have been ineffective with the cash. Number two, maybe they got some book value, some assets that they haven't sweat enough, that they are not making it work efficiently for them. Anyway, whatever the reason is, we do believe that more of that 49% of companies want to jump over the line. That means they want to move more than 1 times price to book. Why? Because just like you and I, they want to do less work. Can you imagine you have to do reporting to regulator and explain why your price to book is less than 1%? So if I'm them, I rather, if I got too much cash, pay out more as dividends. Then I reduce my price to book, or rather increase my price to book because I don't have so much book value. Or I sweat my assets a little bit harder and I move across the line. Now, obviously, we don't want them to move towards 3-4 times price to book because that means it's extremely expensive. But if more and more companies move towards the 1 to 2 times price to book, I think it makes for a very interesting stock picker's dilemma because we really got to study a lot harder to find value within the market from then on. So this is one of the things that we think is going to bode well. So whether or not you do share buybacks, you get more dividends, is going to be one of the drivers that help propel the value of the Japanese stocks and shares that you own within the portfolio. Last but not least, right, even on corporate governance, we're also seeing how, they are engaging shareholders a little bit more. On this slide, what we're just trying to represent to you all is this. The blue line shows the number of activist funds. That means like fund managers or, people that like to talk to them and encourage them to do things for the company, right? And what you have seen is that the number of proposals and all that have actually increased over time, which means that people are getting more active. In the past, you can imagine, right? Japanese companies and all that, no one says anything. Everyone goes there, the chairman says something, everyone hike, okay, and all done, sign, right? But today, no. They are getting a little bit more active in voicing out for the good of the company. At the same time, right, we also see that, when you look at management proposals, not so many management proposals are going through. Last time, 100%. The company says do, everyone says okay. Right. Today, there are people who are hang on for a moment. I want to query a bit more. I'm going to vote against. So that's why the landscape has been changing. Now, to round off everything, so I started off with, story about consumption being on the rise. I started out about macroeconomics being more generally favorable to Japan, and then I talked about the strength and the quality of the companies improving. The key important question to everyone in this room is this. Now that Japan has run up, am I buying it at an all-time high? Is it too expensive? Isn't that what you're thinking of right now? And let me just elaborate using this particular chart. Now, what you are basically seeing is the price to book on the Tokyo topics, long story short, and then the price to earning. Now, we were trumpeting, not only because we are a Japanese asset management company, but because the fund used to be like 11 times, 12 times price to earning. We had to beg, borrow, steal for people to come and invest into the fund, right? And we were telling you, buy. Of course, there were other opportunities which you all paid more attention to. But right now, even though it has rallied, I want to showcase to you all that we think it is fair value. Fair value is about 15 times price to earning right now. Now, does this mean it has room to run? I want to point your attention. Now, obviously, the green bar, ignore the COVID outlier years. But if you look at the green bar over here, what you will notice is in 2012, 2015, 2016, and all this, there were peaks where Japan actually did very well. And that's why many of the seniors in the room are also going to be asking yourself this question. Is this for real this time? We've seen Japan do the one up and then down, one up and then down. Now, when you look at the price earning back then, it was probably around 18 times price to earning. So what I'm saying is that from 15 to 18, you still have a bit of room to essentially play. So what I would say is that, obviously don't mortgage the house and buy everything into Japan, but if you do have some appetite for single country, there is no better place to look at rather than Japan right now, given the challenges all around the world in many, many other asset classes as well. So I will be remiss in the last few minutes not to talk about some of the risk. Obviously, there's still going to be a lot of risk because the world is very intertwined today. Geopolitics is going to play a very, very big part. But, in short, I just want to summarize to say, if you think about geopolitical risks, in 2024, what is one of the biggest international geopolitical risks? Is actually the US elections, right? And if you think about the US election, it shocks me personally that a certain Mr. T is still considered to be the front runner of US elections, okay? Now, I just want to talk about that very briefly. Now, presume that he wins the elections. And then we all go into another bout of 4 years of turmoil. And if you recall, his last agenda was to pick a fight with China. Do you all remember 2016? Now, during that time in 2016 when he picked the fight with China, guess who was the quiet number 3 that was making pretty good, decent returns? It was Japan. It was Japan. All right? So I wanted to just say that if there is more international turmoil, the target is not Japan, right? The playbook was how US dealt with Japan in the 80s and the 90s, but they now take that whole playbook and they apply it to China, China. So what I'm trying to say is that there is still room to grow, even though there are political risks. I'm not going to say that there's none. There's going to be some volatility, but I'm pretty confident we'll end the year stronger than weaker. So last but not least, this is my ending slide. I just want to remind and conclude with this, all right? Some of y'all, you may have missed out in Japan over the last few years. And the reality also is this. Even if you bought a global equity fund, one of the key dangers is that your allocation to Japan has been dramatically low. 10, 12 years ago, the Japan weightage in the MSCI world was about 10 to 12% easily. Today, if you go back and look at the MSCI world, that number has fallen dramatically. I think it's in single digits right now. 8% the last I recall, and I think what has happened is this. The US, having rallied over the last few years, tech stocks and all that leading the way, has displaced a lot of the Japanese names within the portfolio itself. So what has happened is this. If you're buying an ETF, or if your fund manager is a benchmark hugger, he automatically had to sell Japan. So you are actually more underweight to Japan than you actually realize, not forgetting that Japan is still the 3rd largest economy in the world today. So while you're exploring, I hope you give Japan a chance. It may look like a bit of an empty bag, not sure where it goes, what it will do, but if you give it enough of a chance, I hope it will surprise you. One time lucky only cannot, right? False start all the time, Japan, right? Start, stop. But no, I believe truly that because of the quality of the companies now, because of all the things that have happened, it will continue to surprise.
Wow.
One time lucky, 2 times a coincidence, but I do believe with all my heart that if you're looking at any single country, right, because of what is going on, Japan will help you deliver. So ladies and gentlemen, thank you very much. I'm going to hand you back the time and probably move on to the panel speaker.